Oil prices are the first domino to fall when tensions rise in the Middle East. As of 2026, Iran's oil production has been severely disrupted due to ongoing conflicts, and this has sent shockwaves through the global oil markets. Think about this: Iran holds some of the largest oil reserves in the world. When their production is compromised, the supply-demand balance is thrown into chaos. Here's a quick history lesson. Back in 2022, when similar tensions flared up, oil prices surged by nearly 30% within weeks. Fast forward to today, and we're seeing oil prices skyrocketing again, reaching over $120 per barrel. This isn't just a headline for energy investors, it's a wake-up call for everyone. But why does this matter to you? Because oil is the lifeblood of the global economy. When oil prices rise, transportation costs increase, affecting everything from the price of groceries to the cost of manufacturing goods. This inflationary pressure ripples through the economy, impacting not just the energy sector, but virtually all industries. But that is not even the best part. Understanding these dynamics can lead to strategic investment opportunities. Some investors are turning to alternative energy stocks, betting that high oil prices will accelerate the shift to renewables. Moving on to our next point, the Iran conflict is causing a cascade of disruptions across global supply chains. Iran's strategic location makes it a critical juncture for trade routes, particularly the Strait of Hormuz, through which a significant portion of the world's oil transits. Picture this: a single disruption in this region can lead to delays and increased costs for shipping. In 2026, we're seeing shipping costs surge by over 15% due to these geopolitical tensions. This has a domino effect, leading to increased costs for goods worldwide. Here's a pattern interrupt for you. Remember the Suez Canal blockage in 2021 that halted billions of dollars in trade daily? The current situation in Iran is reminiscent of that, but on a potentially larger scale. So, what does this mean for investors? Well, companies that rely heavily on international shipping might see their profit margins squeezed. However, this also opens up opportunities in logistics and technology sectors aimed at supply chain optimization. But wait, here's where it gets even more interesting. Some savvy investors are looking into blockchain technology companies that offer solutions for supply chain transparency and efficiency. Now let's talk about the broader implications for global markets. The uncertainty created by the Iran conflict is driving volatility, and as we know, volatility can be both a threat and an opportunity. As of 2026, the stock markets are experiencing swings reminiscent of the early days of the pandemic in 2020. The fear index, or VIX, has spiked to levels not seen since then. This kind of volatility can be nerve-wracking, but for those who are prepared, it can also be lucrative. Here's a rhetorical question for you. Are you prepared to navigate these uncertain waters? The answer lies in diversification. While traditional markets are volatile, alternative investments like precious metals and cryptocurrencies are gaining traction as safe havens. But here's the twist: some investors are even looking at emerging markets in Asia and Africa, which are less exposed to Middle Eastern geopolitics, as a way to diversify their portfolios. So, how can you as an investor position yourself in the face of these challenges? First, consider hedging against inflation with commodities and real assets. Gold, for example, has historically been a safe haven during times of geopolitical unrest and inflation. Next, look at sectors that benefit from high oil prices, such as renewable energy and electric vehicles. These industries are likely to see increased interest as the world seeks alternatives to fossil fuels. And don't forget about technology. Companies that offer solutions to supply chain disruptions, whether through logistics, software, or blockchain, are poised to thrive in this environment. But here's the final thought that ties everything together. The key to navigating the impact of the Iran conflict on global markets lies in staying informed and nimble. The landscape is shifting quickly, and those who can adapt will find the most success.